The cost of living in the US increased less than expected last month due to control over inflation. Well, today I'm joined by James Marple, a senior economist at TD Bank in Toronto. Well, hello there, James. What are your thoughts on today's CPI data and current management of inflation?
You know, if anything, the U.S. economy is seeing disinflation. The headline rate of inflation is just 1.4%. It accelerated slightly from the 1.1%, but the Federal Reserve looks past the headline number towards the core rate of inflation, which is at 1.7%. It's actually even lower on the personal consumption expenditures index. And really, there's just not much in the way of inflation, which isn't too surprising given the amount of slack still in the U.S. economy. You know, the unemployment rate is at 7.6%, which is still elevated from its pre-recession levels. There's a lot of headwinds to the economy right now, especially sequestration, workers being furloughed, some positive signs in the housing market, but nothing that would lead you to think that that inflation should become a problem.
And continuing this discussion on inflation, do you think this data will influence what we will see at the FOMC, which is actually taking place today and tomorrow?
Well, I think that soft inflation is certainly one of the things that markets should be paying attention to in terms of something that would stay the Fed's hand from slowing the pace of asset purchases. The Fed has a dual mandate, maximum employment and price stability, and we've heard some Federal Reserve members, James Bullard from St. Louis, for example, saying that, if we're missing on the inflation side of our mandate, inflation is becoming too low, well, that's reason to potentially alter the course of policy, or at least, not withdraw from the stimulus the way that we had previously been expecting to. So, I think it's something that is at least they will pay attention to. But I don't think it will change what they're going to say in this meeting, because I didn't expect them to, say they would taper asset purchases at this meeting anyway. I mean, I don't think we're there yet, even in terms of the labor market. So, I don't think it's a game changer, but certainly soft inflation is something that they are looking at. I think that what they will say is that they see some signs of economic momentum, as I mentioned, in the housing market, where we're seeing continued growth, home prices rising quite dramatically, actually, in recent months. We know that there's a major fiscal drag on the economy at the moment, but if we can get past that, there's good evidence that economic growth will accelerate. That message would say that acceleration in economic growth should move the labor market closer to what they want to see, substantial improvement. But we're not there yet, so it's likely to be a few more meetings before they actually announce a slowing in the pace of asset purchases.
And all eyes are on Ben Bernanke this week. Obama has hinted he may retire despite this very crucial time for the Fed. Well, do you think the Fed will move on without him?
Well, I think, as Bernanke has stated, he's not the only one that can manage an exit policy, and I think Obama's what he let slip in that interview, or what he said in that interview, is suggesting what a lot of other people had thought, that Bernanke is likely to retire at the end of his term. I think markets, financial markets, have become accustomed to that reality. Of course, it's nice to see a familiar face and one that they're comfortable with, but I think there will be a transition, and I think it probably will be relatively smooth. But I think it seems pretty likely now that Bernanke is going to retire at the end of his term.
And James, who do you think actually might take his place?
Well, it's a good question. I'm not sure. There's a lot of potential candidates. I think Janet Yellen is a good bet.
Thank you very much, James. Well, viewers, do stay tuned to Dukascopy TV for more economic updates and forex analysis. But for now, enjoy the rest of your day.